Well, good morning, everyone. Welcome to our Thursday morning trading session. The end of a short work week. Tomorrow, of course, Good Friday. The markets will be closed tomorrow. So this is going to be our last kick at the cat, so to speak, for the week. Pardon me. My voice is still a little rusty, as you can hear, but I'm feeling just fine. Thank you very much for your comments and emails. All right, so we saw the market just open up a few seconds ago, and I'm watching the NASDAQ on this monitor. I've also got crude oil and the euro. That's the 6E or the euro US dollar pair if you're trading the Forex. On my other monitor, if we take a quick look at what was going on yesterday, you can see the market more or less in a downtrend, although things got pretty sideways toward the end of the session. A little bit of a dip through the Asian session, slight recovery through the European session, and we're finding ourselves more or less where we left off yesterday. Here, just around the open, we got ourselves a late filter entry signal on the Falcon, which is trying to rally. The late filter entry signal occurs when the filter goes out of sync and comes back into sync, but the trend line never changes color. That's very, very important. Okay, so we're just on hold here for a little bit until we can get a feel for which way the market might be drifting. Right now, looking maybe a little bit more bullish, but we are into the hard edge on the Eagle and the Raptor. We are producing our first in-sync signal here on the Eagle. What time is it? Oh, we're only about 4 minutes into the session. What's that going to cost me to be wrong? So we've got a green bar sell signal off of the hard edge. This is a continuation signal. It does tend to be a relatively high probability signal. And we're getting a nice second push opportunity off of it as well. The signal currently against the ATR, which would account for the rally. And that's far enough away from the signal that I'll consider canceling. And we got a lot of funky stuff going on here this morning. We got now a first micro macro cross, another late filter entry signal. You might even consider here on the Raptor this to be an early cloud crossover. Let's see, what if I took it above the median line here? So this is not a full cloud crossover yet. This is a textbook cloud crossover right here. The clouds cross, the market retreats into the cloud, comes out, and there's our cloud crossover. This is the same idea, except you can see the clouds have not fully crossed yet, which is what makes this a slightly more aggressive signal. But we'll see. Looks like they slipped me a tick on the entry. Try to get my tick back on the profit side. Just making a couple notes in my trading journal about the trade. There's actually the potential here for a good little run up. You can see primary resistance here at 53.82 half. Which is definitely a plausible target, and might even see the next resistance line at 53.92 and 3/4. Trade forecaster saying we are in trend mode, so it may choose to run out here. Very close to my break-even trigger. little bit of a struggle going on. This is going to be a pretty important bar for us, I think. You see, I'm trying to keep my stops back a little bit because do you see what's happening? We're starting to get a more textbook looking cloud crossover. And part of the cloud crossover is this part right here, where the market comes back into the cloud and then comes out. All right, so I'm going to activate my stops now. Excuse me. Good morning, Aspen. No, you didn't really miss anything important. I'm working this early cloud crossover signal right here. So the way it developed was the clouds were just beginning to cross, but it still had the elements of a cloud crossover. I pointed out that this one here, a little bit more textbook, where the clouds cross, the market retreats into the cloud pushes the price back out. That's a more textbook cloud crossover or hard edge bounce. Both are recorded here. This one a little bit more ambitious, but it still has all the elements where the clouds begin to cross. Oops, wrong button. The clouds are crossing, the market retreats into the cloud, gets pushed out. All right, I'm going to force this trade to break even now. Come on. Scoundrels. All right. I may have been a little quick with my stop there. Just making a couple notes in my journal. And yeah, see, there you go, you stinkers. Now they're going to push on through after tagging me at break even. So I was just a little quick with my stop. All right, Aspen says, I see another number 2 signal at 9:29 on the Raptor. Is that this morning? What time zone are you in? We've got this one down here, which occurred pre-market, of course. So we're trading into a little bit of trendline resistance, maybe. Technically, you can see here the Raptor saying that we have a completed cloud crossover signal. You could allow for a second push opportunity on this and take it above the current high. Perhaps cover below the low of the morning. What I'm going to do is I'm going to wait for a little bit more of a pullback here, or see if we get a little bit more of a pullback. Or maybe not. Maybe we're not going to get it. All right, so here we go again. And now we're getting a little bit of a reaction here. Robert says it's hard to see on a black chart. You know, there's been some studies done about the optimal chart background. It used to be charts were always white for a background, and then everybody flipped over the other way, and now the vast majority of charts have a black background. Um, Gray, light gray apparently is the easiest on your eyes. So you can change all this up. You know, you can go here to your background colors, something like Gainsborough or light gray. Is apparently pretty easy on the eyes, but you may have to change your border colors and perhaps some of your other colors as well. That might be a little bit too light for me. That's not bad. So nice rally there. No problem hitting our profit objective. Looks like it might have been a good one to have a runner in play. And it looks like we are going to make that second zone on our support and resistance suite. Getting a little bit of a reaction here, but 53.92 3/4 looks like it is a very plausible target this morning. It's not a bad start on the day. Looks like there's probably a little bit of profit taking or something going on right now as prices pull back somewhat. So good follow through on our Falcon signals and our Raptor signal. Good follow through here on the Hawk as well. We had a kind of a sloppy 4-arrow consolidation. Out of the open, we had, what did we have? I guess the macro pullback. First micro-macro cross right here. Now you're probably looking at this and saying, hey, wait a minute, Eric, how is that a first micro-macro cross? Did the first micro-macro cross not occur back here? Well, yes, it did. This is where the micro line and macro lines crossed over. This is our first signal where everything is in sync. But look at what happened. The market went all out of sync here. Bars are out of sync, trend lines are out of sync, and the filter goes out of sync. And then we come back into sync. This is the first signal where everything is back in sync. That makes this a first micro-macro cross signal as well. And it's just as high probability as this one back here. So trade forecasters saying we are still in trend mode, so we can probably expect another little rally through here somewhere. The problem I'm having at the moment is not so much the market direction, but where am I going to cover this thing? You know, this looks like a good spot to cover, but it may not be enough. If we see a deeper pullback, the market try to retest this breakout zone, which is common. But I think we are going to see another little push up here somewhere. So I'm thinking a move back to the hard edge, both here on the Eagle and the Raptor. Might be in the cards. kind of dead. Hey, way to go, Gary, knocking it out of the park this morning. $932. Nicely done, Gary. Gary says, I'm going to stop trading for today. That's probably a good decision. Anytime you can take almost four figures out of the market, good time to stop. Yeah, of course. Gary says trading four contracts. That's the way to do it. That's the way to do it, folks. Find yourself a decent move, uh, capitalize correctly, and that's how you make money trading. You don't make money trading chasing every single signal. That's what everybody thinks you need to do. Everybody thinks you need to, chase after every single signal and be in and out, in and out, in and out. People look at a chart like this and they salivate and they think, oh, I would have bought here, I would have scalped out. I would have bought here, I would have scalped. I would have bought here, I would have scalped, and so on and so on and so on. No, that's not how you want to trade. That'll make your broker very happy because you'll be paying a lot in commissions. Much better, I think, to trade the way Gary did. You go in, you got your signal. I don't know what size Gary's account is, but you can get in there, you can trade with multiple contracts. In his case, he was trading four, and he capitalized on a little move up here. Doesn't look like much of a move, but when you get enough capital behind it, it can, produce those great days. So nicely done. Hats off to you, Gary. Well, here's an interesting question from Natalia. Natalia asks, good morning, Eric. Well, good morning, Natalia. How many contracts would you recommend trading on a $150,000 account? Now, if you're trading a large account like that, you have a lot of flexibility. I don't think you need to trade your full 2% risk on a $150,000 account, at least not until you get more comfortable with your performance, with your consistency. You can probably dial down your risk amount to where you're risking 0.5% of your capital, or maybe even 0.25% of your capital. That's still going to enable you to trade multiple contracts, which is what you're after. Multiple contracts give you the ability to capitalize your earnings, to maximize your earnings, and they also give you flexibility in trade management. Trading a larger account also allows you to place reasonable stop losses. The thing that's most difficult for smaller account traders, people who are trading $5,000 and $10,000 accounts, is they don't want to put their stop down here, or maybe even down here. They don't want to, because they look at that and they say, I'm risking $300 on a $10,000 account. Well, unfortunately, when you're trading a smaller account, you are going to end up risking a higher portion of your capital. There's just no two ways around it. And inversely, when you're trading a larger account, you can afford to risk a much smaller portion of your capital and still have decent earnings. But for starting out, like I say, until you get more comfortable with your performance, dial it down. I worked with a fellow, he was trading a $300,000 account. We would routinely risk only 0.25% of his capital, and he was still trading 4 or 5 contracts at a time. So that's what I would recommend for you. And then as your consistency becomes more consistent, your trading results become more consistent, and you're turning a profit, then dial it up to 0.5%, and then 0.75%, and then 1%. It's a psychological thing as well. You don't want to go diving off into the deep end of the pool. And someone like you could afford probably to trade 10 contracts on a signal like we had this morning. This would be well within your risk parameters. You could go in with 10 contracts and you could easily, pull $1,000 out on even a short little hiccup like that without damaging your account should the trade not work out. But that takes some getting used to. It's not easy for people to throw $2,500 risk capital at the market. But it's a nice problem to have. Yeah, see Gary with his 4 contracts, he says, I took 2 off at 53.81 and let 2 run and got stopped out on the remaining 2. Entered at 53.72 and 3/4. So Gary entering off of this, around this number 1 signal down here. Yes, trading multiple contracts really is the way to go. You have options. You maximize your earnings, you've got management options. The most difficult thing to do for a small trader, someone who's starting out with only a little bit of capital, is a lot of times you're going to be faced trading singles. And that makes management very difficult. I almost always recommend that when you're trading singles, just take your profit. Take your profit when you have it. Nicely done. Gary sharing a little bit more about his trade. He was using the support and resistance lines. Saw the break here of the 0 line, the median line, that's that gold one. And then watched the market bounce off a bit, and that confirmed his buy. Well done. I really do enjoy hearing of your successes. um, because that's why I'm here, really, to help you become a more successful trader. Absolutely. I think, Floyd, you're right. Floyd says, I think the holiday tomorrow is affecting today's trading. It's kind of got a Friday kind of feel to it where everybody got busy early. There's definitely some profit taking, I think, from the shorts. And it looks like the bulls have their hearts set on finishing the week strong. I think where we're at right now, around this 53, 90, 91, 92, 93 area, I think that was a big number for us yesterday as well, was it not? Or maybe it was the day before. I forgot to jot it down. But we are very bullish this morning. No question about that. If we take a look here where we opened, that's quite the uptrend. Working a possible late filter entry signal here on the Falcon, as well as a macro pullback here in the Hawk. Problem the same as before, not so much picking the direction as trying to decide where in the world would I cover this position. Here's the euro on the Raptor now. I think I need to check my settings. That cloud looks a little funny. Ah, yes. Now you can run the euro on the normal settings as well. These are the faster settings, and as I explained before, I almost always have one set of charts on the faster settings because um, inevitably somebody asks me for the E-mini or a grain market or something. Uh, but what I'm looking at here is we're working a possible reversal, a possible soft edge buy, which would be our number 2 signal. Hasn't printed yet, but we're kind of getting there. Just wanted to bring that to your attention. Yeah, all right. I'm getting a few people here asking about the faster settings. here's the deal. There's a few markets where the default settings do not work very well. The E-mini S&P being the most notable. And bear with me here a moment. I will show you what that looks like. Where did I put you? There we go. It seems that for those markets that are trading at 12.50 a tick, or over $10 a tick, it seems like $10 is the tipping point. So we'll just allow the E-mini to load on here. All right, so here's the E-mini S&P now. And you can see the daybreak lines. Well, actually, yesterday or the day before, not bad. But we still only generated one signal for the entire day. But what ends up happening is your daybreak lines get very close together. This is a 24-hour period, and if you look at the time that you may have actually been trading, you can see you get very few signals. And this is the problem once you encounter instruments that are trading over $10 a tick. Same would be true for soybeans or wheat, the 30-year bond. Unfortunately, the E-mini, being an extremely popular market, falls outside of the default parameters. So what we do is we're going to speed it up a little bit, and we're going to go to our alternate settings. And you can do this for your Hawk, your Falcon, and your Eagle as well. We're going to go to the 446 settings. That's going to be a 4-tick Hawk, a 4-tick Falcon, and a 6-tick Eagle. And what that ends up doing is it ends up opening up your chart a little bit so that you get a few more trading opportunities. This is the same chart now on the alternate settings, and you can see we're getting a few more opportunities. There's a little bit more follow through on the signals, and it just expands your chart. We would do the opposite, of course, if we were producing too many signals. We would reverse the process and we would make the chart bigger and increase the size of the settings. So to change to the 446 settings, you first need to change your chart size itself. So you'll go to your data series and you'll change your brick size to 4 ticks. And then you'll want to go to your Raptor chart and we're going to adjust the cloud size. So the brick size for one cloud is going to be 6 ticks. The brick size for the other cloud is going to be 4 ticks. And your Hawk brick size should also be 4 ticks. When you do that, you're going to find that you should get a nice normal, I'm using air quotes, normal looking chart. One that's going to produce some nice signals and give you some follow through. As you can see, this is practically the same looking chart as the NASDAQ now, is it not? It's pretty darn close. If I show you the NASDAQ here, there we go. The NASDAQ's got a little bit more detail in it, but it's essentially, it becomes a more tradable chart. So that's why we look at changing the settings when we're trading an instrument like the E-mini. Now, like I said, I've always got the faster chart open in case somebody wants to see the E-mini or soybeans or bonds or whatever. I always have a group of faster charts available to me so that I don't need to build them from scratch all the time. But somebody was asking, do you trade the euro off that faster chart? Sure. What the faster chart is going to do is it's just going to produce more signals. So long as you remain selective about your signals, I think you'll be just fine. Starting to see some yellow bars coming in here now on the Hawk and the Raptor. Yeah, good point, Elmer. Elmer says, I know you explain this from time to time, but maybe someone could just put it up in the member area, the faster settings. Yes, that is an excellent suggestion. Going a little sideways here right now. Working another possible late filter entry signal here on the Falcon. Filter not in sync yet. We are getting the warning dots. If we print up here, we will get an in sync signal. Do I want to really risk that? See, Trade Manager says, no, sorry, Eric. You want to do a trade like that? You can't afford it. Problem is, it's starting to look a little bit like a test of the extreme to me. Not that I'm necessarily more comfortable shorting, but see here they come with a buy signal, stinkers. What if I covered it down there? Still can't do it. Yeah, Francisco says, how about the Hawk? Yeah, we don't really have a signal on the Hawk. We got this darn yellow bar, spoiled the macro pullback. I know you're suggesting, well, buy it up there and cover it below support on the Hawk. Yeah, I suppose. We're getting a little bit more activity now here near the highs, and we have seen a test of the extreme. We got a relatively wide trading band. I don't know if we're going to see a reversal here. Everybody would be looking for a reversal right now. This is a double pullback in the Raptor. It's not a formation we talk about a whole lot because normally we look for it to develop off of the hard edge. But the double pullback means the market pulls into the cloud twice, comes out, produces a buy signal, does the same thing, comes out, produces another buy signal. That's your double pullback. Christian asked, Eric, I saw that the support and resistance suite is for NinjaTrader 8 is now downloadable in the Indicator Warehouse Hub, but not the rest of the Indicator Warehouse packages. Can you share your information about NinjaTrader 8 and the Indicator Warehouse updates? Yes, the programmers have been able to get the Ultimate Support and Resistance Suite working on Ninja 8, and I do believe the Trade Forecaster is also working with Ninja 8 now, or maybe it was the mean Renko bars. They almost had the whole DTS system up and running, but then Ninja snuck another update in there, and they essentially had to start reprogramming from scratch. So the DTS system, not quite Ninja 8 compatible just yet. That's not to say you're not at liberty to try it, of course. Just be aware that you might be the person finding the bug. Oh, way to go. Gary says, I'm doing Ninja 8 with the Raptor, along with the Day Ranger, and no hiccups. Yes, Francisco, the DTS system will be updated like the Raptor. The programmers are just waiting for a stable platform. Once NinjaTrader stops tweaking it, then the Indicator Warehouse programmers can get busy. I guess a big upgrade with Ninja 8 are the graphics and the cosmetics, if you will. And that's kind of messed up how some of the graphics perform on the Raptor and DTS. Aspen, it's a bit of a learning curve here. Aspen says, Eric, I had another #1 signal, but because I do not still know the formation of high probability signals, i.e. 1, 2, and 3, I missed it as the market moved quickly before I could put in my order. Any suggestions? I do miss quite a few good moves. Welcome to the world of trading. Okay, here's the Reader's Digest answer. When you get a high probability signal, for instance, a cloud crossover signal, the system is telling you you've got a high probability signal, you should consider taking it. Whether you should take it or not is no longer the question. The answer, when you get a high probability signal printing, the question is no longer, should I take the signal? The answer to that question is yes, you should. The question now becomes, can I afford the risk? Am I comfortable with the risk amount? Can I afford the risk? Let's say you choose to run your stop down here. Can I afford the risk? Yes, I can. In which case, you may just say, all right, I can afford the risk. Chances that I'm going to take a full stop out here are pretty slim. If the market reverses on me, there's going to be at least one opportunity through here to reduce my risk. But if you get a high probability signal and you can afford the risk, you take the trade. It really is as simple as that. The sessions you need to watch out for are the ones where the market just seems to be repeatedly flip-flopping. Now, it's not flip-flopping so much here because you produced a trend change signal and then a trend continuation, a trend continuation, a trend continuation. But when you get these periods, excuse me, where you're producing number one signals, number two signals, number three signals, number one signals, number three signals, number two signals, and there's no follow through. Those are the times you need to be able to recognize, okay, the market is sideways, it's going to bounce around a little bit, I'm going to wait it out. As far as missing moves go, yeah, you're just going to have to get used to it because it happens. If you spend any time in the trading room at all, you're going to see me miss a lot of moves. I routinely miss big moves. And it's all part of the business. You are going to miss moves. I miss moves all the time. But as I said, at the end of the day, it really just becomes a logistics question. Here we have a high probability signal to short. I would not go in for the full amount here. Why? Well, because we just saw the market make a serious push to the upside. What are the chances that the buyers are going to walk away from such a strong rally? Probably not very good. Chances that the buyers are going to leave this rally alone is probably slim. Does that mean we won't see a little bit of a pullback here? Does that mean we should not take the number two signal? No, we should take the number two signal. It is a high probability signal. But rather than go in hot and heavy like this, I may dial it down and just throw a single on it. So that if the trade goes poorly, instead of losing $400, I've lost 140, which is much more palatable. So now you're short. Now you're looking for an opportunity to do something with your stops. You should always assume that you are wrong about your position. I remember one of the first pieces of trading advice I came across. The trader said, always assume you're wrong about your position. That seems counterintuitive, doesn't it? We like to be optimistic. We always like to think that we're right. But by assuming you're wrong about your position, it tends to put you a little bit more on the defensive. You're going to be a little bit more concerned about protecting your capital. If I think my trade is wrong, and this bar finishes on the low here, and actually gives me a little mini swing, I may choose to bring my stops in a bit. So now instead of having 140 at risk, I'll have about $70 at risk. So now I've reduced my risk exposure even more. If this represents about 0.5% of my trading capital, now I've only risked 0.25% of my trading capital. You're going to have a really hard time going broke if you're routinely risking anywhere from 0.5 to 0.25% of your trading capital. See, but it's still a valid signal. I can afford the trade, so yes, I should take it. You'll be amazed how many times the Rafter and the DTS system see things, I'm using air quotes again, see things that you don't see. You know, our mind works a certain way, and we don't always we can't interpret everything that's going on. So here we got a market that is potentially reversing. We've got the counter trend signal. And if I happen to get stopped out at this point, well, that's what I would refer to as a good loss. Why is it a good loss? Well, I think I managed the trade well. I took the signal, right? I gave the trade every opportunity to work out. It's not like I took the signal and immediately I started jamming my stops in ultra tight for no good reason. That would not be a good loss in my book. The market's rejected these highs 3 times now. Even if it breaks through here, what do you think the chances are it's going to reject it a 4th time? Probably pretty good. All right, so I would have been stopped there for a smallish loss. And this is where I start paying attention to how the trade works after I'm out of the trade. Does the trade work out? Was I too quick with my stop loss, as I have a tendency to do from time to time? And those are things that are going to go into my trading journal so that the next time, maybe I'll keep it in the back of my head, hey, Eric, don't roll your stops so quickly. Yeah, we're starting to go sideways here now. So, you know, A reversal, at least short-term reversal, does not seem out of the question. Yeah, Stephen's asking here, how many people in the room are bearish right now, trying to stare down this bull market? It's I think you're still better off buying, but I would not be surprised to see a move lower here, back to the hard edge. Steve says, personally, I love it. It's funny how we get comfortable with certain positions. There's some people who prefer to short, some people who prefer to go long. I find I do my best trading when I don't come into the market with a bias, and I do my worst when I look at a chart and I feel the market has to be bullish today or bearish today. Oh, interesting. Christian sharing some of his insights. Christian says, Eric, I use the chandelier. So that's the chandelier stop strategy with the default settings, 14 and 3, as a filter for the 1, 2, and 3 signals, and it works great in the YM. For example, if the number 2 signal is against the filter, Christian's going to avoid it. So he's looking for the chandelier to be in sync with the signal that prints. Oh yeah, so here's a number 2 signal. It's in sync with the chandelier. Good follow through on that. Here's a number 1 and a number 3 signal, both in sync with the chandelier. Well, that's fascinating, Christian. Good observation. Yeah, here's a number 3 signal that was against the chandelier, and it did not have any follow through to it. Interesting. I like it. I might be following that for a little while there myself. I like that a lot. Thanks for sharing that. Yeah, all right. Christian says, I haven't tested it on the NASDAQ, but it works good on the YM, just for a little FYI for everyone there. Aspen says, I do take the signals. It's the ones which form so quickly that I miss. If I got some pre-notification, maybe I would be ready with my order. Yeah, unfortunately, there is a little bit of a learning curve, so that you learn to, identify the cloud crossovers when they're starting to form, when you see the hard edge bounces, when you see the number two counter trend signals, and perhaps a good exercise is just to roll through your chart bar by bar and see if you can't spot the signals as they form. Because what's going to happen is the Raptor is going to print it, on the bar that fills, so you really can't cheat. So you can just grab your cursor and pull it back anywhere in the chart and just go forward, excuse me, bar by bar, and see if you can't see the signal develop. Oh, we got a big move here. If you can't see the signal print before it prints on the Raptor. I'm looking for this number two signal now. Wow, that's a monster move. That came just in the afternoon into the close. Now, I would not be so concerned about signals that are developing after the close or into the close, because the market's going to do some funky things around the close, which is at 13:15 Pacific. But like I say, it's a good exercise. You just go through your chart and see if you can't spot those number ones and the number two reversals and the number three signals, and then just follow them through. See what kind of follow through you get. And that will help heighten your awareness of when a signal may be getting ready to print. The Raptor prompts are there to help you identify the high probability ones, but of course, there's nothing that's going to replace your own education so that you can actually anticipate how the signal is forming. Francisco asked, would it work the same in the Eagle? Yes, I think it's a great exercise. If you've got 20 minutes or 15 minutes, go through your chart and practice your signals. Just roll through bar by bar. Oh, it looks like I picked the same day here. But go through your chart and look at what happens when you get like a soft edge bounce. And then go back here and wait for your green bar sell. And look at this and ask yourself seriously, would I take this trade? Would I take this trade while it's against the ATR? How would I set up this trade? And then follow it. This is a great learning exercise. It doesn't cost you anything to do except a few minutes of your time, and you will learn so much. You will gain a lot of confidence in your signals. So when you look at a trade like this, and now you're playing with it, and you have to ask yourself the hard questions, just like you would if you were in the trade for real. Do I roll my stops? Do I hold my stops? And don't cheat. Don't roll it forward and say, oh, I would have rolled my stops down here and I would have got out of break even. No, you can't do that because you can't do that in real life. Right? So play the chart and you'll make some good decisions, you'll make some bad decisions. Don't beat yourself up. You're trying to learn. You're trying to get more consistent. That's your objective. The market's going to throw you some funky looking things. It always does. But the more chart time you have, the more proficient you will become. Yeah, see here, Robert has a good suggestion too. Robert says, keeping a plain chart up helps me. And that's good too. If you find it beneficial to run, a clean chart next to it, let's say you're going to run I don't know, and this is just an example. I'm not saying you have to do this, but anything that helps you make a decision. So if it helps you, this is a 15-minute NASDAQ chart. If it helps you to have like just a plain chart next to your rafter chart, excuse me, then go ahead. Here on the 15-minute chart, you can see how bullish the market was. There's no question. No question that we saw a lot of bullishness come from here. So, maybe that's going to temper how you handle the counter trend signal. Maybe you'll do as Christian does and use a chandelier as a filter, or the ATR, or whatever. Yes, so what Francisco says, I find it's different to trade live versus playback. Definitely it is, but as a learning exercise, it's the best we got, right? And the more realistic you make it, the better off you will be. So if you just randomly grab a chart and pull it back, and then go bar by bar, you can pause it as long as you need to and look at this and say, I wonder if that's a number 2 signal. That kind of looks like a number 2 signal. We've had a downtrend. Now it looks like the trend might be failing. If that were a number 2 signal for real, would I take it? Well, let's see. Where would I place my stop loss? Is that a trade I would take? And these are very personal questions. If there's one thing about trading that's perhaps more true than anything else you can do, is that trading is a very personal endeavor. It will tell you more about yourself than almost anything else you can do. It will tell you what your risk tolerances are. It will tell you what your greed tolerances are. And I'm not saying these things in a negative connotation. It's good to know that, I'm not very comfortable having that much at risk. Therefore, I need to take trades that have less risk so that I can trade with a clear head. Or you may find that you're totally comfortable with the risk and you prefer to be more aggressive on the trade. You might find that with you. You might find that you always have to have a runner in play because you can't stand it if the market goes on without you. And likewise, you may find the opposite, that you much prefer being all in, all out, knowing that you snagged all that profit before the market did a reversal and took it all away. That you could have been up $300 instead of $100. These are only questions that you can answer. I can show you how I trade. I can show you what I do. I can help you try to find and identify the best signals. And I certainly don't mind you piggybacking my trades. Hopefully they work out. But, at the end of the day, it is your money. You are the one ultimately responsible for it. Oh, I see. I think Francisco meant the market replay or the simulated trades. I don't do that so much. Market replay is a great tool. It's a great feature on Ninja. It allows you to play back any session. The problem with market replay is that you can speed it up or slow it down. I much prefer just to grab the cursor, pull it into the history somewhere, and just play it bar by bar, because this allows me now to look at a chart. I can pause it if I need to. I can make a decision about whether that's a trade I would take or pass, and then play it forward and say, oh, okay, that was a good decision, that was a bad decision. And you will learn from it. I guarantee you will learn from it. If you're not currently journaling, start. Get yourself a spiral notebook and just jot down some notes on the trading day. The reasons you took the trade. Not just the entry and exits, but the reasons you took the trade. You should have 2 reasons for taking a trade. You'll find you'll do better if you have 2 reasons that you can take a trade. All right, boys and girls, I made another little poke higher here, but I think that's going to be it for the bulls. That wasn't much of a rally out of this sideways range. So we might see the sellers show up after all. Or maybe I spoke too soon. Yeah, they're holding tough there. Saw the Geiger counter pull over here to the bull side a little bit. Oh, now it's pulling hard to the bear side, to the sell side. Excuse me. No, they're still pushing. So the buyer's not finished with this market just yet. I think I'm going to call it a day, though. We're trickling into the lunch hour, and it is a holiday weekend, so the market is likely to get a little bit congested as the morning winds down. Um, I'll be back on Monday, though. I hope everyone has a nice holiday break, a little 3-day break, and we'll catch you Monday morning. I'll talk to you then. Bye for now.